Hello traders, welcome to this session. It's on Tuesday, September 17th of 2024, and in this session I'm going to show you simple practical steps that if you apply them to your trading every day, you will definitely improve in your technical analysis. You are reducing your chart time and taking confident positions that will result into your being patient and actually make money off your trading. So today I want us to analyze what we call GPY pairs, that is GPP, GPY, and then we can actually call it a day. So straight into our charts, let's open MetaTrader 5 and start off our analysis. Okay, GPP, GPY, GPP, GPY. In our strategy, where do we start from? We usually start from the highest time frame possible. Why? Because if you open your lower time frame, you will be confused where price is going. Taking for example the 5-minute time frame where we are currently, if somebody asks me where price is going to, I would say maybe buying. Somebody else will be saying sell. Why is that? Because we are on a lower time frame and price looks a bit more chunky. So if we go to our monthly time frame and we start from our monthly time frame, what do we do here? We are not here to sell or buy. We are just here to understand the overall direction. That is, if we take our rectangular tool and actually highlight the last 3 to 4 months. Highlighting in the last 3 to 4 months. What can we say? What can we conclude from the latest data? Analyzing the latest data is by taking the line tool and actually put it where price is currently in the monthly time frame. Then we can just conclude that price has been selling. Why is that? Because price is towards the bottom of the box. Taking the box, if we taking the line tool, if price was, let's say, above this line and then all the way up, then we could be concluding that price has been buying the last 3 to 4 months, and we will be looking much more of buying opportunities. Since the price is towards the bottom of the box, then we are looking much more of selling opportunities. And what if, guys, price was in the middle of the box? Just a minute for you to think. That's right. You can counter check your answer with mine. That is, we could be avoiding the market if we don't see an entry in the 4-hour time frame or so. Why? Because the market is consolidating and will not be making us any profit and will be charged the swap fee for free, just not making any money. That's right. Since we have seen that market is selling, price is selling, we look much more of selling opportunities and we delete all our tools in the monthly time frame. Then we will go to the next time frame, that is the weekly time frame. Why, guys? We have already seen what we want to see on the monthly time frame on GPP, GPY. We go to the weekly time frame. What do we do in the weekly time frame? On the weekly time frame, we only we only look for where we can take the next positions from. What positions, guys? Selling positions, of course. Where do we take our positions from? Major zones. Major zones in the market are zones where price are reacted to or from in the last past or in the past. Okay, so moving in the weekly time frame, we can actually see the zone. The zone has been a major zone in the market. The zone has been actually a major zone in the market for in the past when we analyze our charts. So seeing that fully well, what do we do in the meantime? We go to the lower time frame, that is the daily time frame to do what? To just refine our zone. What is refining our zone? Making it more small in the lower time frame. So we can delete all that, guys, and do what? And draw these in the lower time frame, just like that. After doing that, guys, we can move actually to the 4-hour time frame and just readjust that as this. Okay, guys, that is where we can look for selling opportunities in the meantime. And actually we can draw another zone as this zone right here. This zone right here is another zone where we can take selling opportunities from. So if price doesn't react from the first zone, our analysis, we don't say that our analysis is not correct. We wait for price to react from the second zone, just like that, guys. That's correct. So if price doesn't react from this zone, we wait for price to react of this zone, and we can take our selling opportunities. Why is that? Because price moves from one major zone to another major zone. So if price doesn't react of the first zone, we wait for price to reach our second zone, and we can consider taking selling opportunities from that zone. What do we do right now on GPP GPY? We wait for our hands. Why is that? Because we are not counter traders, and we only look for continuation trades. With that being said, we can actually add another conference, that is market sessions. What are market sessions? Market sessions are 3 in the market. That is when the big boys come into play. And what are the 2 major market sessions that the big boys come into play, guys? That's a question on to you. If you have been watching the last 2 videos that I posted on my YouTube channel, actually you can answer that. That is right. That is the London session and the New York session. So if price taps into the first zone, into this zone in the New York session or the London session, then we can consider taking sales opportunities to the later downside. If price taps into this zone in the major market session, then we can consider taking selling opportunities to the later downside. Why is that, guys? Because big boys are in the market in those sessions. Why not taking up positions or opening positions in the Asian session? Because the big boys are not in the market. Another conference, guys, another conference is noticing how or when the big boys are in the market. How do we notice that? By noticing major candlesticks in the major zones that we have actually drawn. What are the major candlesticks that we use for entry, guys? Are the bin bars, then golfers in the 30-minute or the 15-minute time frame. So if we want to see or a bin bar in this zone in the major market session, then we can consider taking selling oppositions from those zones and put our stop loss above those zones or above those candlesticks. If we gonna see an engulfer candle in this zone or this zone in the major market session, that is the London and the New York session, then we can consider taking selling positions from those zones to the later down and actually make our money and enjoy life, basically, guys. That because that is the major reason we are trading. How do we notice that a candle is a bin bar, or what are the examples of a bin bar candle? We got the 30 minutes time frame, and I will show you what we call actually a bin bar candle. My charts are actually not coming up, they just come up. If we see a candle like this, guys, let me show you an ideal bin bar candle. So if we can see a candle like this, do you see this candle in those zones or in one of that zone? Let's say if we see that candle in the zone, then we consider taking selling opportunities from that zone. If we go and see a candle like this in this zone, then we consider taking selling opportunities from that zone to the downside, guys. That's an example of a bin bar candle. Another example is right here, guys. Let me show you, guys. So if we want to see this candle in those zones or in the first zone or second zone, then we consider taking selling opportunities from those zones, put our stop loss above those zones, and I want to show you where we put our take profit before we finish this session. So stick to the later end of this session. If we gonna see these engulfing candles, do you see this candle? Sorry, guys, do you see this candle and this candle? This is the first candle and this is the second candle. If we see first candle being engulfed, the body of the first candle being engulfed fully by the second candle, then we take selling opportunities from those zones. If we see, guys, again, if we see these kinds of candles in those zones in the major market sessions, then we take selling opportunities, and then we put our stop loss above these candles or above those zones, and then we hold, guys, till the next major zone, that is let's say, let's go back to the 4-hour time frame or the daily time frame. If we catch if we catch a selling opportunity from this zone, then put our stop loss above this zone or above the candle we use for entry. Then we can hold as far as this zone. Do you see this zone? That's a major zone in the daily time frame. So that's one thing we know for certain, that price moves from one major zone to another major zone. Another zone you can actually hold your trades onto is this zone. In actually from the weekly time frame you can see that much more clearly. That is another zone. We are swing traders, so we hold trades from one major zone to another major zone. That fully said, with that full understood, I don't think there is another thing I'm gonna say apart from that. We just wait for price to tap into those zones, and then we consider taking our selling positions. What do we do in the meantime? That is where patience comes into play, guys. That is where patience comes into play. Patience makes actually a greater trade. A greater trader is made up of patience. You place your trade and you let the market to give you the profits. So what do you do in the meantime? You sit back on your arms and avoid watching your trades. Actually, guys, that affected all of us in the beginner stage, and I don't want you to undergo the same. So no matter what you do, guys, don't watch your trades as they play out. Just put your stop loss and actually go do other things. Go watch a game, do something else, guys, and allow your trades to play out. With that full said, I actually want you guys to do what we call backtesting with this strategy and actually see if it has a win rate of higher probability, so that you can be following blindly. You just do what you actually know that it has higher probability of winning. That full said, guys, I have a community of traders where I guide my followers and give them free signals before they take not signals but actually setups. My setups, if they follow them,